Okay, traders, here we go. Um, Here we are. VTP Stage 2, Technical Tuesday Coach Call 183 for the 3rd of March 2026. I hope you're well. Hope you've had a good start to the week in these rather eventful and uncertain times. There's lots going on, so plenty for us to talk about today, as always. You're very welcome here. Just remember that you're always responsible for your own trading decisions. And if you want a bit more help and support in your trading, doesn't matter what you trade or how you trade, the VTP tag is all about bringing structure, discipline, and sustainability to your trading endeavors. You can use the QR code or just ping me if you've got any questions. Okay, so let us finish off as always with sterling. Okay, so sterling profile up here, sterling profile here. Pound against dollar on the 4 hour, euro sterling 4 hour, pound Aussie, pound Canadian, FTSE on the 4 hour, pound Kiwi dollar, pound Swiss franc, and pound Japanese yen. All right, so let's have a look at this. What's this telling us? Well, as I said, the pound against the dollar, if I look on that weekly chart, we had already peaked here. Okay, let me just draw in on these charts here. We had peaked and flushed. This was the Federal Reserve cutting rates. We flushed the highs, and then we've just fallen away there. Okay, and we've continued that. Is that dollar strength, sterling weakness? We're back now down this week. It looks like we're closed beneath the weekly 50. Okay, as I said, this is only Tuesday. This can change quite considerably, but that's what it's looking at. If we go down the daily chart, yesterday's was a bit of a indecision candle. We had all sorts of range there, but so far you can see today we've kind of flushed lower. The 4 hour chart from when we opened and when we've just worked our way lower there, haven't we? Just worked our way lower, and then today, the 30-minute chart. This 30-minute intraday VTP stage 3, and it just literally, you can see for yourself that has just been in one way. Now, what we did have, as of course, is interestingly we had a little bit of a bump running into the start of Rachel Reeves' budget section. So the thing is, if you've been short all morning as an intraday trader, you're going to close your position before the budget starts because you don't know if what she's going to throw out to you. So invariably, no surprise that if you've been short, you want to cover your position in front of the big news, and that's what we've seen. Tick, tick, tick. All right, that's why we've had that kind of move. And then I think this afternoon, what we'll see is some indication on what markets make of her comments. If we look at the gilts, all right, the actual UK government debt, that has not been a pretty picture this morning. Why don't we have? We'll have a look at that at the end of this. All right, I'll have a look. We don't normally, but we'll have a quick look. So clearly, pound against dollar's been there. Pound against Japanese yen. Remember, Japanese yen is at the bottom of the pile, all right, and yet, okay, we had this broadening formation on the weekly chart. We're making lower highs here. Okay, the daily chart is messy. All right, it is very messy. But the 4 hour chart, it's kind of interesting that the 4 hour chart, we started off with basically a push up, but then once again, 200 period moving average, it's just double topped up there nicely, hasn't it, and dropped its way. This morning, once again, look at that. This is the 30-minute chart. This is the last 2 days. So this is Monday. This is today. This is proper grand old Duke of York here. March them up to the top of the hill and then march them down again. And it was peaked by this beautiful double top. Not only was it a double top, but it's a double top with a morning star and a second morning star there. Okay, morning star formations that unfortunately happened, that in the dead of the night. Okay, so that's the Japanese. Now, of course, we had Ueda talking, the governor Bank of Japan, but actually what we did do is we fell all the way to basically where we were on Monday, and it looks like we've kind of double bottomed there, and we're pushing up. And now I'd be looking to see, well, actually, do we just work our way back up into the middle? But if you look at that this week, that is probably a reflection of reflection of risk on, risk off. It's a reflection of it's a reflection of basically the kind of the volatility and trauma that's going through markets, as well as that literally it's flipping left, right, and center, which as an intraday trader is fine. If you're a swing trader, this is a week. This is a tough. It's a tough week in that sense. Pound against Swiss. Well, we just looked at it, didn't we? at the end of last week, we really flushed those lows, but look at how it's come back. As I said, look how it's come back. It shouldn't be like that for Swiss franc this week. And interestingly, if you look at like pound against Aussie 4-hour chart, that has just been a lovely downtrend. All right, if we go up to the daily, that has been a fantastic downtrend of Aussie strengthening and sterling weakening. And just look at how that's played. It's been beautiful. All right, that is VTP stage 2, in one picture. Okay, sterling weakening, Aussie strengthening. So basically, shorting pound against Aussie, as a good swing trader has been the play. It's been a descending triangle with the daily 50 acting as really good resistance, and then it's just accelerated away there, hasn't it? But that we started the week like that, but actually we turned around this morning. This morning was one of my intraday trades. After a kind of messy overnight session, we Pac-Manned and then reversed and pushed our way higher. Okay, so yeah, that's kind of interesting. I think that's more to do with Aussie than sterling, but we'll see. Pound against New Zealand dollar. Phew, it's messy, that isn't it? If you look at that daily chart, once again, it had been in a great trend, but if you look for the last 3 weeks, pound against New Zealand dollar, you might say, Paul, is it kind of trying to force in a bit of a double bottom there, a large double bottom? You could say that maybe. You could say that. Some people might even say, Paul, are we putting in a bit of an inverse head and shoulders there? You could. I'd just say it's very scrappy at the moment. Okay, I wouldn't necessarily say there's a base built there, but it is quite scrappy, that price action, isn't it? And that kind of big bullish engulfing candle there. Maybe that is the end of that downtrend. And what's happening here is we're just transitioning, all right, transitioning from downtrend to uptrend on that. So if we look at that, bang, 4-hour chart, 4-hour chart's not pretty at all. If you look at it for this week. In fact, if you look at it over the last couple of weeks, not terribly pretty. Intraday wise, okay, yeah, we popped up and then we dropped. All right, that was to be expected there. Pound against Canadian dollar. Pound against Canadian dollar is from a few months ago where we had months of just nothingness. All right, just literally that is range bound, mean reversion trading to actually getting a direction, which is accelerated because you're getting sterling weakness, Canadian strength. Once again, that's what we're looking at. Look at how that accelerated last week. Bang, pulled back, beautiful. That is just, I'll be looking at this as, there we go. That is a counter trend line break, and it's also, a kind of a flag stroke channel, but you can see for yourself how much that has kind of fled or dropped. And you can see even on the intraday, yesterday we had some really nice swings, okay, on the intraday basis, but this morning we came down to yesterday's lows. We've not managed to pop up of that yet. So is this going to be a case of just seeing more Canadian strength this afternoon? I would just be watching that. And then finally, before we take a quick look at gilts, as always, euro sterling. Euro against the sterling. We had been in a few months in a nice downtrend into a nice flag, a bullish flag, and we've popped up on that. But the daily chart here, I was interested here, long here from where we put in this big bullish engulfing candle, bullish key reversal. We pushed lower. We're in a downtrend. We pushed lower and then basically pushed all the way higher and closed above the high of the previous candle. All right, they don't happen very often, but when they do, you want to sit up and take notice, and that's where we've gone. But then you can yourself see this week, having rallied up the last end of last week, we've double topped there in the 4-hour and fallen all the way back down. And that is just, once again, if you've got Friday, Monday, double top, falling all the way down there, rallying all the way up. To me, this is euro sterling on the 30 minutes, and this is probably a pretty accurate session, as in it's just collecting the highs and the lows of the session. Doesn't really know what it wants to do. Okay, a lot of this will be to do with, I think, how Europe and the UK. How they respond to the events of the weekend. I think that's what we'll see. That's what will happen. As I said, have I got it on this one? Yeah, let's have a look. Yeah, so here we go. So just to finish off, I don't normally go into sort of gilts and stuff. It's not something I really trade per se much, but it's interesting to look at. This is GB 10 years. So this is the yield on 10-year UK debt. This is a 4-hour chart. This one's a 4-hour chart. This one's a 30-minute chart. So generally, you can see we had been in a downtrend, but bang, look at what's gone on here. Woomph. There we go. Right. Now, admittedly, government debt, okay, most of those yields are going up because actually, well, there's a couple of reasons. A, money is probably going into US Treasuries and also into to gold, but also just a case of it's a reflection of I think personally, a reflection of kind of the performance of the Starmer government over the last few days, just literally hand-wringing, U-turning, no conviction, moral cowardice, just what you'd expect of human rights lawyers. Okay, they all just want to go by the book, which means they just have no real sense of what the real world's like. The real world doesn't work like that, and most of us knew it, but it's just been showing up in spades. Okay, and so hence why people, do you want to own government debt? All right, you don't. So the government debt has been dropping in price, which means the yields have been rising. So that means that basically, if the government wants to borrow more money, and I suspect they will, it's going to cost them. It's going to cost them more, isn't it? And that is not a pretty chart. And considering, we've had the sort of the statement, not really much reaction. There's not, if this you always have to think, well, could this be the pump before the dump at the news? But that doesn't seem to have happened yet, does it? That doesn't seem to have happened. People aren't convinced. People don't want British, government debt. Why would you, when you could stick your money into, treasuries or gold or anywhere else, really? So that is just a little bit reflective of the state of play in the UK at the moment. Okay. All right, let's draw it to a close. I appreciate I overran a bit there, but part of that is just because there is literally so much to talk about at the moment. It is an eventful week, lots going on. All right, so I hope you found that useful. I hope that's given you a little bit of help, a little bit of insight. As always, I wish you the best of success in your own trading, ladies and gentlemen. Have a great trading week, and I'll speak to you soon. Cheers.